Hey everyone, in this video I'm going to do a request asked by longtime subscriber Doug Travel asking if Cava Group stock is a buy. So I'm going to look at this excellent restaurant company's latest results, its longer term prospects, and answer if it's too late to buy this excellent restaurant stock. So let's jump right in. Let's take a look at this analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so starting with the general snapshot of 2023 at a glance for Cava Group, revenue came in at 717 million, which was up nearly 60% year over year. Same store restaurant sales, meaning the restaurants that were open for at least 12 months, the increase in sales from those restaurants were up 18%. That's a key metric I look at, and it demonstrates growing demand from a restaurant and not just growing revenue because you're opening more locations. Also, restaurant level margin of 24.8%. That's excellent. That's top tier restaurant level profit margin. And unit volume of 2.6 million is also top tier unit volume. To put this in perspective, this is roughly what Chipotle hits in their restaurants. And Chipotle, you I don't need to tell you about the success of Chipotle, one of the most successful restaurants today. So Cava Group definitely generating significant growth and doing a good job in its existing locations. But let's dig a little bit deeper. All right, so in the fourth quarter, they opened 19 new restaurants, bringing them to a total of 309. That's a 30% increase in total year over year. Same restaurant sales growth were 11.4% in the fourth quarter, less than the full year number. And you can see a decelerating growth in same store sales. And then restaurant level profit margin of 22.4%, which was up 200 basis points, 240 basis points year over year. That was good news. For the full year, they opened 72 new restaurants and increased 18% same restaurant sales, as we discussed already. So growth is solid and the company's profitable. They're increasing profitability. They're growing sustainably. All this is great news. Let's continue. In the first bit of not so great news for Cava stock is the outlook for 2024. Management said they're going to open between 48 and 52 locations in 2024. At the midpoint, that would be roughly half of the amount of locations they opened in 2023. So a significant slowdown in growth of new locations. Similarly, management is forecasting same restaurant sales growth of just 3 to 5%. At the midpoint, that would be 4%, just 4% same restaurant sales growth. Look at that number here, 18% for 2023. So a big slowdown from 2023 in terms of same restaurant sales growth. These are the existing locations and how much more sales they expect to drive from the same restaurant. So they got that initial buzz, they got that initial traffic increase, but they don't expect that to continue. Restaurant level profit margin, they're forecasting between 22.7 and 23.3. So let's say 23% restaurant level profit margin, 23%. That's going to be down from 24.8% in 2023. So decreasing restaurant level profit margin. So those are not great forecasts for Cava Group, which had experienced phenomenal growth in 2023. It expects that to slow down significantly in 2024. Now, while this kind of growth is, could be solid for just about any restaurant company, when you're as expensive as Cava Group stock is, you need to be perfect. You need to be perfect. Let me show you its valuation. Cava Group is trading at a forward price to earnings ratio of 200. 200. That's really expensive. That's pricing in a lot of growth for the next several years. So for the company to be growing at the rate that it's growing at in 2024, I don't think it justifies a valuation of 200, right? If it was trading at a lower valuation, I could overlook some of those decreases in same store restaurant sales growth and decreasing restaurant level profit margin. I could be okay with that if the valuation wasn't 200, if it was, 30 or 40, but not when it's at 200. Just like when you go shopping and you look at different products in different categories, if you look at the highest priced product, you want everything to be perfect in that product. You want the right color, the right fit, the right style. You want everything to be right if you're going to be paying that top-notch price. That's basically what's happening here with Cava Group. It's trading at a top-notch price, and so as an investor, you should expect everything to be pristine and heading in a great direction to pay this kind of valuation for a company. Now, I admit the company has done an excellent job. It's still growing. It's still adding new locations. It's operating in a category where it's got several years of growth remaining. It only has 300 locations. It can arguably rise to a couple of thousand locations. So there's growth for several years ahead. However, that growth is arguably already priced into the stock at a forward PE of 200. And the rate of growth is slowing significantly. The rate of growth is slowing. So it might take a much longer time for Cava to get to those several thousand unit locations than maybe was expected in early 2023 or mid 2023, when restaurants level sales growth was in double digits and margins were increasing and everything was heading in the right direction. And, like I mentioned, the company is doing a great job here. 73.09 million in cash from operations. That's up from being relatively flat in July of 2022. It's already generating profitability in cash. It's self-sustaining business. Doesn't need to go to investors and ask for more money. It's already generating sufficient cash to fund its growth, to fund its opportunities. And operating profit margin, overall company operating profit margin, 2.95%. Increasing from negative 3% in January of 2023. So it's moving up and to the right as it's growing. It's increasing its operating profitability, although I'm not sure if it's going to demonstrate a similar increase in operating profitability in 2024, given that it's forecasting a decreasing restaurant level margin. Now, could it make it up by having more locations? It could be. It could be, but it's a question mark. It's not a no-brainer that it's going to continue improving this in 2024. So some hesitancies I have with Cava Group. Overall, it's an excellent business. Everything working really well. It's up there already in terms of performance with Chipotle and Starbucks in terms of the numbers, comparably restaurant level numbers and AUM numbers, and all of those numbers are comparable to some of the leading restaurant companies today. But the problem is that it's trading so expensively at a forward price to earnings of 200. So you're already paying up for that premium performance and then some. So for all those reasons, while Cava Group is an excellent company, I would keep it on my list of stocks to buy, but I wouldn't pay this high a valuation for Cava Group. So for now, I would just place this on the watch list, rate it as a hold rather than a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.